Okay, hi, good afternoon. Thank you for spending your afternoon with us. First, I'd like to thank PropertyGuru and, of course, the developer Tuan Seng for having this event. I only have 45 minutes, so the topic is quite deep and wide, but I'll try and run through as much as I can because I think market outlook itself already takes up a good 30-45 minutes. I'll be touching on some of the updates on the latest master plan that you recently heard from the news to show you where the focus is in Singapore's URA planning now. And then, of course, we will compare some of the price trends for freehold, leasehold properties and how properties in Singapore without master planning, how they grow, and those with master planning, how they grow faster, right? Okay, so I'll just start off. Disclaimer for all speakers are the same. So whatever decision you'll make in purchasing is all your decision. What we provide you is facts and figures and information, okay? We are from Singapore Realtors Inc. SRI stands for Singapore Realtors Inc. I think a lot of people wouldn't have heard of us before, but now you all will know. Now you all will know us because we are probably the fastest growing agency in this 1 or 2 years. We grew from about 260 agents to currently 700 agents within a span of 6 months. So we are heavily involved in projects, and you'll see us very often, even in high-end and the mass market as well. So we've run through a lot of seminars, education that we have done. I think the slide is a bit blur, so is that the best for the contrast? Demounted, okay. Okay. Okay, I'll just share with you what happened over the past, in 2019, what happened over the past years. Anyway, we are into March of 2019 only. I just want to show you a trend over here. You can see that since 2007 onwards, we have a very healthy growth of units that are transacted, be it whether is it in the new launch arena or whether is it in the resale. I'll show you resale in the next slide. This is for new launch. The yellow bar that you see here will be the launch units, number of launch units. The purple one are the number of sold units. So you can see that our launch and sold units are actually quite healthy, on par. Of course, over here in 2013, after 13, you see that there's a very big dip in the transaction volume in Singapore. So what happened during this period, I think all of you will know. What happened in 2013 was the introduction of TDSR by the government. So that one was the final slap of the cooling measures that came in that really cooled down the market. So for the past, you can see 1, 2, 3, 4 years, we actually had very subdued transactions in Singapore. Does it mean that the buyers are not around? They are always around because we still have high employment rate, our income is still growing. The only part is that people shy away because of the affordability in condo now. And of course, we saw a final rebound that came back last year 2017, probably in the first, second quarter, we saw a rebound in transactions. We also saw a rebound in pricing. Okay, so this is where the subdued area is, and you can see that over the years, on the average, Singapore transact about 12,000 units of new launches. And if you see from 13, 14 onwards, right, we actually have a very big gap in the transaction. So there's a pent-up demand that's coming up in this area. Transaction volume for resale. You see a similar trend over here. From 13 onwards with TDSR coming in, we have a very big dip in the figures of resale transactions as well. So you can see the recovery, the downtime is 2013 to 16, and you can see from 17 onwards where the recovery is, you realize that the transactions all start heating up, especially in the resale market also, right? And this is the part where we are talking about when we look at the pent-up demand. We have a shortfall in this and it will start to accumulate, which is what we saw last year. We saw a very quick transaction numbers that came up, but to be stopped again. That was in your July 6 last year where a new cooling measure came in. So it pressed the market to be subdued a bit, but you can see that there's a very huge pent-up demand that's growing in this area. This one is the latest URA figures that came out. What you want to be looking at is the vacancy. Vacancy rate in Singapore is important to look at because some people you all will buy for investment. When you're buying for investment, you want to know how many units in Singapore are actually left vacant over the years, right? And this data are accurate to every single unit in Singapore on occupancy. last time in before 2006, what happened was they used a sample size of maybe 1,000 units to give you a figure. And then after that, with technology now, and of course with the e-stamping and everything, your duties that are being paid, these figures out here are accurate to every single unit in Singapore by URA. So what we see here is a vacancy rate of 6.4%, which is very healthy on a single digit. Because if you put in layman term, right, it simply means that every 100 units in Singapore, there are only 6 units that are left vacant. And high chance these 6 units are in a very old rundown that are not in demand anymore. And this is a very healthy rate. We see a breakdown of the figures. What you can see here in CCR, RCR, and OCR. So what is CCR is actually a core region that consists of your District 1, your 2, 4, 9, 10, 11, right? So that is where your prime area, Sentosa area, and the downtown core areas. And then of course RCR are your fringe area, and OCR are your suburb area, right? A lot of people think that suburb area will have lower tenancy rates, occupancy, but in fact it's a reverse. If you look at what is happening here, as of the last quarter of 2018, the vacancy rate in OCR, which is a suburb area, actually is the lowest in Singapore. Meaning to say only 5.1%. But if you have a unit that is in the core region, you have a higher chance of a vacancy in that area. So that is how we are trending. Of course, some people ask, how come this is happening? Which is very simple, because the rental rates and everything in Singapore are actually shooting upwards, especially in the RCR area, in your CCR area, right, in your core region. And especially over the past year, since 2006 onwards, you realize that government has been pumping a lot of amenities, a lot of new happenings and developments through the master plan in your suburb area. So this is actually part of what is happening in the decentralization process, which I'll be touching on later, on how Singapore is moving the entire country itself, right? So you can see that the draw actually now falls within your suburb area, which is your OCR, and that's where a lot of investors and people are pumping their money in instead of how we were doing last time, okay? So this is a cycle of how Singapore has been trending all these years. You can see that from one of the first hit of a crisis that came into us was during 1996, 97, and this is the period of time of your Asian financial crisis, right? So you can see from there we have a huge dip in prices of about 10 quarters. Our downtime was about 10 quarters, and 10 quarters works out to be about 2.5 years, right? About 2.5 years. Thereafter, we had a good recovery, and then you have your SARS breakout in 2001, year 2001, and then we had a longer downtime of about 15 quarters. That one works out to be about close to 4 years, 3 years plus, close to 4 years, and before we recovered. And then, of course, after that, you have another dip, which is a shorter crisis over here, which is your, what they call it, they actually call it, there are a lot of terms, we call it a greater financial crisis, or people call it a global financial crisis. But in layman term, what was this period of time? It was your Lehman Brothers, your US subprime period. And you realize that this time round, with stronger fundamentals of what the government has been doing, our recovery time is actually a lot shorter. Meaning to say we only took about a year before we hit back up again. So I have a very interesting question to ask. How many of you think that the next crisis is coming? Do you all think that way? Or you all think that in the next cycle coming up, the property market or globally in whatever market, it is still going to be on an upward trend? Up or down? Don't know. Down. Okay, so you see, this is the thing. A lot of people will always try and convince you that it is up, it's still up, it's still up. But of course, everybody in Singapore knows that there's this 10-year cycle, right? The 10-year cycle. So let's track where is this 10-year cycle. And I'm going to share with you why it may be different from what we all are thinking about. Okay, so you see, from 1996, 97, okay, this is the part where we are recovering, right? By right, we should be pulling all the way to until about 2008. Okay, from here, sorry. From this recovery part. So this is the past cycle. We don't look at this. We look at the part where we started to recover. That means on an early bull, we were starting to run up. And this year, when we run this line down, is 1998. 1998, And we are, by right, we should, if it's a 10-year cycle, we are supposed to run all the way until 2008, and we hit down again. So we saw the trending here. We have a 1998 recovery. We went all the way to 2008. We had another hit of a crisis. Okay, so what happened in between here? Your SARS. We had one more down before the 10-year cycle down. You are getting me, huh? So what happened during this SARS period? This is something which we call unpredictable market fundamentals. If we take this is a natural crisis, something is a natural disaster that came in that nobody can control. But fundamentally, if we take this away, so it caused a down. Fundamentally, if we take this away, your 10-year cycle is still quite accurate. After 10 years, from 1998 to 2008, you see a down. Okay, so this is the thing. Why is there a 10-year thing that people are talking about? Everybody talk about 10 years, 10 years, 10 years, but nobody really understand why is there a 10 years. Because there's no fundamental to prove the 10 years. So I was reading about this thing, I was studying a bit, and realized that this 10 years thing happened globally. It's not because of market fundamentals, because it doesn't prove that every 10 years it should fall. It's actually psychology. Market is controlled heavily by psychology instead of just fundamental. So if today we are big boys, okay, we are the big investors in today's market, whether it's in trading or in global economics, right? When the market runs strong for 10 years, psychologically, there will be people who think that the market should flatten down now. And there will be people who do actions and stuff like that. Because psychologically, you know it's coming, it will lead to something that will happen. And that's how it naturally resets the entire market every 10 years. Okay? So then let's look at this. So since I said 1998 to 2008 is a 10 years, so from 2008, we had a down, 4 quarters down, we recovered in 2009. So is the 10 years up now? From 2009 to 2019, is it up? That's why a lot of people in the market, and I'm going to embrace this thing. I'm not going to be shy and say that it's not happening. If we all see from some of the market trends that you're looking at, we feel that it's coming. But you have to realize one thing. In this 10-year cycle, there's one portion over here where you saw it down in 2013, which suppressed our price all the way I wouldn't even say that we recovered from the TDSR. It has been suppressing our price. It's been suppressing our transactions from 13 until now in 19. Okay? And what will happen is, even if this 10-year cycle happened with your US trade war or anything economically around the world, I will tell you that Singapore prices in property are protected in a certain way because of an artificial suppression by the government. And that is what they have been doing all this while. Why are they so fast suppressing the market again with the last cooling measure? It's simple, because they know that if they don't do that and you have a runaway like what is happening in Hong Kong, in China, our prices will be hit very badly. Similarly, during the Lehman Brothers, our recovery is a lot faster. There are some countries that are not even recovered until now, right? You have US is still in debt, right? Your Europe countries are still in problem. And the reason why Singapore can recover fast because of strong fundamentals. Similarly, this period is what people are waiting for. This is what the government has been doing. This is what is, I used my own term, I call this a self-inflicted crisis that happened in 2013. What they did was simply to pull forward 2019, what is supposed to happen. They pull to 2013, they inflict this crisis, let the prices be suppressed, so that if happen globally, 19 come up, what will happen to our prices? We are already suppressed already. You get what I mean? So either recovery will be fast or impact will not be hitting hard largely on Singapore property market because our prices are just way too low compared regionally. Our highest price transacted in Singapore, if you talk about your core region, Orchard, highest PSF transacted is only about 6,000 plus per square foot. Highest transacted in Hong Kong is at about 28,000 USD per square foot already. And that's the kind of price difference we are talking about. But of course, this is another 2 hours of talk. I'll just go through first. I just want to give you a very rough idea of what is happening. So you see, over in 2018, even with cooling measures, you can see that prices are still going up about 7.9%. Okay, these are based on a suppression of price in 13. Prices are still going to continue to climb, slowly but surely. These are all the lands that were being sold for the past 1.5 years, 2 years. We had about, I think, slightly more than 85 lands that are being sold through en bloc, through GLS land, and this is what is happening. And the land prices fundamentally has been ongoing on a high side. If you look at the launches that are coming up this year, you'll probably see a lot of launches that are hitting above 2,000 per square foot, or maybe even coming close to 3,000. We have about 40 this year. A good 80% of them are all in the high-end area, and the land prices are shooting up. So this is the estimation of price trend projection in Singapore. You can see in 2015-16, our core region at $2,000 per square foot. This was what was last time. Of course, your fringe area is at 1,005, your suburb area at 1,000. So how many of you have seen this period of time? There were a few $1,000 to 1,001 per square foot launches were your notable ones, like your High Park residences, your Symphony Suites, your, what else? High Park, Symphony Suites. You even have your, okay, never mind, these two is enough, I cannot think already. So why I'm saying this is because during this period of time, a lot of people also think that, hey, the prices were a bit high on the OCR during that period of time. But those who have gone in would have exited at a very good price. Okay, so what I'm showing here is any one point of time in this segment, people will always feel that the prices are high for the area. But if you have a future price trend that you see and you know that the prices have been suppressed since 2013, you're confident the market is going to continue to go up, right? You enter, if it's affordable, when you enter, you will see your prices hitting up. So for example, what I did, that time when we were launching High Park residences, I bought a unit there, a 2-bedroom, 2-bath, 18th floor. 2-bed, 2-bath, 18th floor, I bought at about 650,000. Today, the value of the area is probably about 800 plus. About 800 plus. So when you enter at a low price point, 1,000, it went up to how much now? We are marketing at about 1,000, high 1,002, going at about 1,003 on the resale market. Similarly, for even, I'll show you some of the examples in Jurong area, so the west area. I'll show you some of the price trends on how the prices are hitting up. So what we are estimating now, all these are based on leasehold land. Leasehold land, meaning to say all the 99 years one. So you can see that even leasehold land in the OCR, you're probably going to see them hitting about 1,004, 1,007. Freehold land, you will probably see them hitting about 1,007 plus to 1,009 already, even in OCR. So if we talk about the RCR, which is your fringe area, 1,008 to 2,005. Is it happening now? This is happening now, because your fringe area, we are talking about places like your Amber area, your Mayor area. These areas are all launching at about 2,003, 2,005 per square foot already. Previously, they were all launching about 1,500 to 1,700. So the next wave is here, and then after that, after this year, we'll probably be projecting the next price trend for 2020. Because of the suppression of 2013, like I said, the artificial crisis that was inflicted, the prices are still suppressed. It's still an entry level now, but it will continue to grow after that. I'll show you more. So is there a bubble? A lot of people like to ask, hey Ken, so now the price trending upwards and everything, is there a bubble that's coming up? Like I show you the first portion of how the suppress of pricing in 2013, your bubble is actually non-existent. So, but let's look at some charts. I took out this chart from UBS. UBS actually did a bubble study. They do a bubble study every single year. So to them, what is the definition of a bubble? It simply means that your prices of your housing, if it goes way too high above ratio of what your monthly average income is, the bubble is forming up. So by right, they should go in tandem in terms of income and your prices. Everybody needs to be able to afford it. So in Hong Kong is one classic example of your commoners will not be able to afford a housing in Singapore. That's where the bubble is formed up, right? So that's the definition. And you can see over here that this is what they drew up, and they released this just recently, the latest update one. You can see that those that are in red, it simply means that the bubble is forming up, okay? It's not fair value. Yellow is growing, and of course, green is where we call a fair value prices in terms of income and property price ratio. And this is where Singapore is. We are probably the safest country for investment in property prices now, because our ratio towards income and the risk of bubble is actually zero. You can see from here. So let me show you some of the numbers here. So this is the bubble index. You can see in Hong Kong, they are ranked number 1, which is why I'm using them as a very classic example. Their bubble is about 2 times of what people can afford already. And of course, you can see even in London, it has gone up by a lot. Paris, and if you hit down, even in Tokyo, the bubble is forming. But in Singapore, we are one of the lowest in terms of bubble index, meaning to say a very fair value in terms of property prices, right? And over here, they are showing you the house pricing rising in all cities. What they will show you is for the past 5 years, the black line, if you see the black lines all over, they will show you how much have the prices moved in the past 5 years. Okay, so you can see in Frankfurt, or maybe you look at Hong Kong, for the past 5 years, the prices have been increasing. The black line is here. In Singapore relation, you can see the past 5 years we have been decreasing. And that's where I've been talking about your 2013 suppression in price. And globally, they can track that since 2013, our past 5 years have been decreasing, which is why in the last quarter, you can see even if we increase, right, this yellow one will form what happened in price trend in the last 4 quarters. So you can see in the last 4 quarters, even though we increase, we are still on a very good fair value because of the past 5 years drop, which is why I say the price are sustainable, okay? This is the real bubble. Because I was talking to, we always exchange a lot of ideas with the economists in Singapore. So I was talking to this economist, and we were talking about bubble, and just nice he was in front of his computer screen, and then they have these charts that they can pull out from Bloomberg and everything. So we were talking about bubble in Singapore, and he told me, Ken, do you know what is a real bubble? Then he screenshot this thing he sent to me over WhatsApp. So I asked him, what is this? So this is where real bubbles are forming. This is your Bitcoin chart, whereby it has been suppressed all this while in a sudden shoot up, then a sudden drop. So this is what is a bubble. And if we look at this, is Singapore Property Price Index, you realize that, so he's asking me, where is the bubble in this chart then? There's no bubble. Because why? The bubble was probably here that time, but you can see that the prices have been very stable based on government planning. So this is interesting. This chart is one of my favorite charts. Okay, so this is the reason why I say that even if a lot of people think, I want people to realize that if everybody think that the market will run in tandem across all segments in the market, for example, they think economically, market is going to come down. US trade war coming, shares prices are falling and everything, and they feel that, everything should come down in tandem, right? But the thing is, when you realize that if you can study very closely what the government has been doing, they are preventing housing price to fall in tandem with the market because 85%, or maybe even we have an occupancy rate ownership of about 90% in Singapore. If this bubble is allowed to form up and to fall in tandem with the market, right, Singapore is going to crash. Because a lot of us, what we do is our first investment pot, everybody's dream is to go into property, and anybody is running around in property prices, right? So this is the part. This is all the property price index around the whole region. Meaning to say, in Hong Kong, in Taiwan, in Malaysia, in KL, all these places, you can see that from 2011, right, the PPI, the property price index around all the region has been quite closely rising according to how the market is supposed to be. And then in 2013, you can see this light blue line, when everybody decided to hit upwards across the whole globally in property price index, Singapore decided to go down. And this is in line with your 2013 TDSR implementation, which allowed us to go down so that we are not with the big boys up here. And that's how suppressed our pricing is. And that is also the reason why, if you realize over the past years, we have a lot of foreigners coming in on property purchases. We also saw a lot of Hong Kongers coming back to purchase. You won't see them in statistics because they are labeled under your China side, right? And we have a lot of China people coming in to purchase. Why? Because they call this the new playground regionally. They all know if we can see this chart, if UOB can release this chart and we all can see this chart, I tell you the big boys out there who are looking to pump up money in terms of investment funds, right? They know where the new playground is. It's not in Hong Kong anymore. This is where the new playground is because it only makes sense. Prices suppressed to this stage, the rest of the countries are all shooting upwards. Which is why I say, don't always assume economic trends are in tandem with every segment in the market. What you should be doing is to pull away and see and study each segment of the market, how the government is doing things, how the price trend is running. It may run differently. And I'm afraid that a lot of people will think that, it's going to run in tandem. A lot of people will stop from investing or probably buying, even they feel it's a fair value because they feel that something is going to happen. They stop. And they probably miss a window along that way. So that is another huge topic, but I like this chart a lot. And this is by UOB. I like to use banks charts because they have done their due diligence before they release to us. Okay, so that will sum up entirely on how the property market is behaving, especially this year. Last year, you will probably hear a lot of property market outlook with a lot of certainty in how it's running. This year, a lot of people will not dare to touch about this market outlook because they will be faced with questions that the market is coming down. And today, we just address to show you how this countering has already been done. So that's how we are projecting the market. We are going to still see a healthy number of launches coming in. Lands that are being bidded by developers are still having healthy number of bids. Like the last two GLS land, we saw a total of 6 bidders for the land. Developers are still buying land. Purchasers are still purchasing units. It's just where you time the correct place. So now we'll zoom into the master plan. And from here, you will probably see how you should angle your next property purchase. Because since there are so many launches, where is the next hotspot I should be looking at? And I run a lot of my purchase decision and a lot of research based on where the government is planning for Singapore. It's that simple to invest in Singapore. It's not like other countries where you don't have proper master planning, that is not transparent to people. Country is too big, you don't know where the places are coming in. Singapore is that small. It's either north, south, east, west, or central region you're going to buy into. Look at where the government is shifting their powers, where they are moving development into. Look at where the price point is. You probably already have a very good answer where it's happening. So let's look at this. I studied the URA plans quite a bit. And from here you can see that a lot of people keep talking about master plan. A lot of people talk about master plan, but a lot of people don't know what is a concept plan. So in URA's planning, what they always do is they will set a concept plan. And concept plans are always set to run Singapore for the next 40 to 50 years. That's how concept plan is done. And in order to achieve what they want to do in concept plan, they will then come up with small master plans every single 5 years to achieve what they set in concept plan, right? And then of course there will be implementation. So let's look at the last concept plan. 1971 was the first concept plan that came out in Singapore. And how did we run and plan the urban structure in Singapore in 1971? Our independence was in 1960, what? 1965, right? So 1965 was the independence period. And from 1965, 6 years later, we started urban planning to plan how we're going to run Singapore independently, right? So what happened was, because we don't have experience, the government actually invited United Nations to come in to plan for them. United Nations came up with this thing called the Ring Plan. What is a Ring Plan? Singapore, what they do is they will choose the center force of where our CBD is, identify that place, and they start to ring outwards. So what they did was, CBD was placed right in the southern part. You know why they don't put it right at the top, right? Independence, just independence, no point you put it right at the top. Why not in the middle? That's where our central catchment area is. So they push it right to the southern part. So Singapore's geographical central region is not really central. You realize it's right sitting on the southern part of Singapore. So if we decided that this is the CBD area, and then we start to ring outwards, it's like a bull's eye. So what happened is, the bigger the ring, the less valuable your land is, right? The smaller the ring, the more valuable it is. So that's how simple it is, which is why you see our first HDB township and everything came out in your central region, in your Queenstown area. That's our first HDB satellite area. So residents will all pump into the CBD area, the fringe area, and they start to ring outwards. And then the rest of the country, the rest of Singapore is not developed yet. Okay, so is it the correct thing? After a while, 1991, they decided that this entire thing was wrong. Okay, wrong. Meaning to say that they will cause a very big problem of what? Congestion. Everybody will start to zoom in and travel towards the center of Singapore in the CBD, and you will cause a lot of congestion, number one. Number two, value of land around Singapore will not heat up. Meaning if today I'm going to stay in Woodlands, or if I'm going to stay in Jurong, my prices will never heat up, because it's a ring plan. So what they did was, they decided, in order to solve this problem, 1991, they came up with a new concept plan, which is what they call the decentralization of Singapore. We studied this term in school, but this is the real life of what they are doing. I studied so much last time. So in decentralization, there are a few objectives they want to do. Number one, they want to bring away the congestion from the center of Singapore. They want to make sure that people who are living on the bigger circles around Singapore have an increase in value of home, number one. Number two, to live, work, play, learn within the area, so that traveling become less, right? So that they don't need to keep having excuse to give us higher COE prices or so. Okay, so when they did the decentralization in Singapore, they map out this thing, and they use master plan to execute this. So this is simple. When we had a central region here, right, what they created were regional centers. Definition of a regional center is actually a township that is supposed to support up to 800,000 population in the area. Okay, live, work, play, learn all in the area. And of course, they identified 4 areas. One is your Tampines, your Jurong Lake District, your Woodlands, and your Seletar. See? So when did they first have this? The first regional center that was formed up was in Tampines. And a lot of people didn't know about it. Because during the formation of Tampines Regional Center in 1997 or something, internet was still not readily available. A lot of the plans that were hit out, right, are not as transparent as what it is today. Today, all we need to do is just search where's the next regional center. You'll find out all the answers. So they started growing this area in Tampines, and you realize many years back, East was the atas area in Singapore. You realize? Even I had this joke lah. Even when I'm studying, my friends always tell me, "Hey, let's go Tampines to eat or to." I stay in the West. Okay, I stay in Clementi. So they always ask me to go to East because they say the East girls are more atas, more chill. Then they say the West side, the girls a bit more alien. That was how the trend was last time, right? And I start to link back all these things. I realized, hey, it could be because of a master planning. Because why? East was probably the only place whereby they started to throw in a lot of shopping malls inside. You have your Century Square, your Tampines Mall, your Tampines One, and all these shopping malls that all went in, right, in the regional center. And then you started to see like AIA come in, your Stan Chart banks and everything all started to pump inside. And then now, because we study a bit more in master plan, we realize, hey, that's a regional center. And that's the reason why East have been so popular in their launches last time. You have your Pasir Ris area that everybody is buying crazily. You have your Tampines area. Simei area was popular that time. And needless to say, you have your East Coast area that was ever popular. So that's where the East, and you realize during that period of time, West was not, nobody was talking about West at all, until recently. So where is the shift of this master planning? They shift from Tampines, now they're coming to Jurong. Actually, last master plan, they are talking about Jurong already. We thought this time in 2019 master plan, we thought they would have talked about Woodlands because it's a clockwise direction. Okay, Seletar is already stated to be the last regional center that will come up. Okay, they're not doing anything much about there yet, but they're dropping hints here and there. We thought these next 5 years they are talking about Woodlands, but we are wrong. They expanded the entire west area of development, which I'm going to share with you later. Okay, so our current CBD is like that, right? I mean, probably nicer than this. These photos were quite old already. And what is happening in our future CBD? Last time when you travel along CBD, you have your Anson Road, your Robinson Road, and everywhere. All you see are just office buildings. Agree? You only see DBS Tower 1 and 2. You see all office buildings along the way, your UIC building. But today, if you realize, I map out, and these are not completed, there are a lot more. They are reducing commercial power inside the CBD. They are increasing residential homes inside there. You realize? And one of the first one was the sale at Marina, and then they started off with Marina Suites and everything. Even your DBS Tower 1 and 2, they are gone. They removed, and now it's your OUE downtown core with a mixed service apartments. So there's a very huge vibrancy that they are pumping into the CBD area, purely because of what? Purely because they want to reduce the number of commercial nodes so that people will start working inside your regional centers. And that's what their plan is. So this is the big major plan that is happening in Singapore, right? And okay, you all probably cannot see this. This is one map that I like to look at it a lot. Singapore is such a tiny island, and a lot of places actually have already been congested with a lot of buildings and everything. So I like to look at this map purely because I want to find out, I feel that, okay, we all know that there are huge developments that are coming out in Singapore, and huge developments need very huge pieces of land, but we have limited lands like that. But if we look at one glance at this, where are the huge areas? We look at this. This is one huge part that is empty. What is this? This is your Changi Airport area. Are they growing the area? They are growing because even your recent Cross Island Line is heating up with an aviation station over there. Your entire aerospace, even your Paya Lebar Air Base will all be housed inside here. So that's where all our aerospace traffic will be coming in from. And we look at this empty plot of land, which is this. Do you know? That's your current Paya Lebar Air Base, right? So this is where they have plans to shift the airbase away, and then this will form up a township as huge as Toa Payoh. And again, this plot of land will be gone also, right? So that's where the empty plot. And if we look at this middle part, this is your central catchment area. Will it be gone? Most probably not, because that's where our reservoir and everything is down there, right? So this part is good to stay. And then of course, if we look upwards here, this is where your North Coast Innovation Corridor and where your northern side is, okay? And that is where a lot of the empty lands are being built up. So this entire North Coast Innovation Corridor is also another huge development that will happen in later future. And Tuan Seng also has a project there, which is called Candice Residence, right smack inside your North Coast Innovation Corridor. So this is another hotspot that you want to be looking at in the long future. Okay, then if we look further down here, this part, this is where our, okay, this part over here is where our air base is, the Sembawang air base and everything, up here, this part. And over here, this part is where this is another catchment area, this is another catchment area, this is another huge plot of land that a lot of people are looking at. And if I want to zoom in, okay, if I zoom in, because this little area here is where the next, this year master plan, the update, they are zooming a lot into this little plot over here, which I'm going to share with you shortly. So they are eating up all these empty plots of land with plans already. And this is important for you to guide where you want to be purchasing into, okay? Because you want to be near developments. It's not just about being near MRT. It's not just about being near shopping mall, because everywhere is going to be near shopping mall. Everywhere is going to be near MRT sooner. So these are where the hotspots are. And of course, this part is also the next focus of where master plan is talking about. This is where your Tuas area is, and that's where our mega port will be, right? So these are the hotspots we are going to go into, and let's look at the next one. So from here you can see, this is based on master plan, color zone. You can see that once you look at gray is transportation work, so which is why it's Changi area. This is where your central catchment area is, and then of course, this is the hotspot I'm talking about, the Tengah area. This is another catchment area that's not being touched yet. And of course, this is where your cemeteries are, the Lim Chu Kang area, right? So let's look at, so you see these dark green ones, can you see the dark green ones? They're actually for military use, which is why I say this is your Paya Lebar Air Base, your Sembawang is down here, and of course, this is another of the military use that we are looking at, and this usually will not be touched, except for Paya Lebar moving out, right? Okay? So I think I'm running out of time. I only have 5 minutes left, I think. 5 minutes was shown 5 minutes ago. So let me quickly just skim through what is happening in 2019 Master Plan. Of course, there are themes. Every year they have a theme. Last Master Plan theme was Live, Work, Play, Learn, right? Live, Work, Play, Learn. This time round, they just simply made it a bit more chim, but it's still the same thing. It's still Live, Work, Play, Learn. Okay, so we just stick to that. I mean, budget is the same. Every year they release the budget. If you read the trend, right, sometimes that sentence, they change around a few words, but it's still the same thing, because it's the concept that they want to run. So regional highlights, let's move into west side, because after we study all the different regions of how master plan has updated, we realized that the western side has probably, seems like the focus, but they didn't say it that way. They have a lot of other places, but it seems like the biggest commercial nodes and the largest developments for the next 5 years are all pumped into the western side. Because why? They completed Tampines. They haven't completed Jurong. They only had this Jurong Lake District, which you have your Jam, your Westgate, and all these things coming around the area. But the entire West has not been completed yet, which is why this year we see a lot more in depth of the western side. A bit they are touching on Woodlands, but Woodlands, we still have some time for it to start growing. They have to complete Jurong, and then they will move up to the Woodlands area, and they will move to Seletar, and they end off the whole decentralization process, which is what I'm sharing with you, right? So let's look at this highlight. It's a bit blur for you because I think the lighting is... So you can see this used to be your Jurong Lake District, which is where it was done and dusted. It's really done and dusted. The area, not much to talk about already, because they've completed. We are still waiting for the missing puzzle of the high KL Singapore high-speed rail, whether is it coming up. But it seems like a lot of changes after somebody took over. So I was scared. Okay, let me tell you what happened. This is off track a bit. When I was studying, I study master plan, and I see master plan, I'll buy into master plan area, right? So the High Park, I bought into it because that was where your Seletar Regional Center is coming up, right? Your High Park. I also bought into J Gateway. J Gateway is in your Jurong Regional Center. So I bought J Gateway. It's only a 1-bedroom. I bought at about 730,000 for 1-bedroom, rented for 2 years, and we just sold it. So if you check J Gateway transaction, the latest caveat is our unit. 1305 we sold at 850,000. So 1-bedroom we made about 100,000. I think quite okay. But to be honest, right, I was initially planning to let go 1-bedroom J Gateway at about 900,000. That was my desired price. Then when somebody decided to call off the high-speed rail, I also kanchong a bit, because that was the final missing puzzle to the Jurong Lake District, right? And to me, I let go at 850. I think, in future, will somebody come in to buy 99 years, 1-bedroom and 900 plus 1,000, 1 million? I think probably not without the high-speed rail. We don't know whether it's going to happen, but I let go, I make my money, I move off. Right? So same thing. Once I get this, where am I going to go to? I will probably look at the new master plan coming up, the hotspots. I'm going to spot where is it going to be. If the plans are going to take too long to come, I will go into freehold. If the plans are immediate, I don't mind going to 99. Right? So let's look at this. Other than the Jurong Lake District happening, the next biggest thing they're talking about is your JID, which is a Jurong Innovation District. And when it comes to innovation in Singapore, it's something that you really need to pay attention to. Because why? Innovation is where we are going to move off into. We don't have human resource, we don't have natural resources. Innovation is something we need to pump in very heavily into. And as long as you see aviation, you see innovation, these are the hotspots for long term that you want to be inside. Because when you have a big innovation district like this happening in Tengah area, you are going to see government pump in a lot of houses, a lot of amenities to support the work area in there. And when these kind of things happen, your prices will shoot up naturally because there's a lot of things that are happening. You realize Woodlands, even though there's a lot of things talk about Woodlands Regional Center, you realize Woodlands prices don't go up. How many of you own a Woodlands place? In your HDB, even in your private condo, your prices are not hitting up. I have a client who bought La Casa EC when it was 5 years later. So he bought in 2013. He bought La Casa at 840,000. I just met him recently. He said he wants to sell. Hope that can make money. I tell him cannot. Why? Because I studied the transaction. It is now transacting at about 780, 770,000. So he's losing. Okay, so why am I telling you about this? Is because you need a lot of developments to pump into the area and not just plans so that your prices will go up. Woodlands have one problem is you have 6 condos that are there, and that's about it. For the many years, the 6 condos are there, and there are no other condos coming up. There are no huge development of amenities or HDBs or anything that don't have. No transportation networks are being talked about in the area yet, but they will probably be the next hotspot. But we don't know what is happening until we see the plans from government. So when you are inside this kind of area, when we are talking about the Tengah area, when they start building BTOs of 40,000 units that are coming in, amenities that are coming in, this will start to spin off because it's a very volatile area that we are talking about, and your prices will heat up. So when you are studying about hotspots, you also need to study what are the immediate plans you are bringing in. Okay, so let's go on because time's up already. So I still have maybe about 30 slides. 1 minute one, I still need 30 minutes. Okay, so you have Jurong Innovation District, and below the Tuas Terminal is another huge thing that is happening. So it's all happening in the west. Let's zoom in. I think all this I can skip. This is Jurong Lake District last time. Nothing much. They are just going to add in updates. They are just going to add in some technology or self-drive vehicles test bed inside the Jurong Lake District. That's about it. So they are testing the vehicles inside this area, but this is the biggest one that the master plan has been talking about. The Jurong Innovation District is where they will serve all the R&D, all the testing of all these autonomous vehicles, your robots, and all these things will all be pumped into this area, right? So in Singapore, do we have an innovation district like this before? We probably don't have. We have One North, more on medical science, a bit on media, all this media police, fusion police, a bit of that. The next focus point is coming into Jurong Lake District, and this is huge because this is the real innovation part where they're going to tie in with schools so that they can have intern learning, right, on robots formation, a lot of these kind of tech things that are going to run. Testing of using smart devices to test how your roads are running, meaning to say they are planning to have such things where they have a phone with this smart app whereby even the bumpiness of the road they can test. When is your next bus, taxi that's coming in, all this they are going to test. And all these are going to sprout from the Innovation District, and Jurong Lake District will be the test bed where they're going to test all these things out. So the future of where the next regional center as compared to Tampines, that one is more family lifestyle. This is where the future they're talking about. And once this is done, they'll probably move into Woodlands with more high-tech offices and staff. Then the whole innovation corridor will be a second part of this Innovation District. Understand? So Innovation District is where you build, you R&D, you do research. Innovation Corridor is probably where all your companies will start to form up there. They will sit there. And then they will end off with Seletar. Okay? So Tuas Terminal is a mega port. This one will be in 2040. This one will house consolidate all our ports activity in Singapore. You know, we have already cleared off our central port, right? In front of your Tanjong Pagar area. We are clearing that. We are clearing the Keppel area. We are now shifting all into your Pasir Panjang area, but that is only temporary. Pasir Panjang has expanded now, but it's temporary. So once they shift Pasir Panjang out into Tuas, we will consolidate all port activities into Tuas already. Very high tech because it's one of our cash cow. So they have consolidated port activities into Tuas, consolidated aerospace activities into the eastern side. And Singapore is going to be very clean in that sense. You have your Jurong side, there's innovation, R&D, top part companies will be sitting there. So that's how you will be looking at Singapore on the overview. Okay. Some of the things, one of the latest update, because we are about 10, maybe 12 minutes to Hume Station. You know this downtown line that is already operational, and Hume Station was supposed to be part of it. Just that they have built it, but they have not opened it up yet. But they have announced already, they will be opening up the Hume Station in which year? In year 2025. 2025. They're opening up the station. Why? Because this station is, now the trains are running past this station. They're opening up this station so that they can support the inflow of people working in this area. There are a lot of pumping inside. So what we are seeing here is, let me show you. I just skip all this. I really don't have time already. I just wanted you to see this. I skip a lot, sorry. No time. I think Guru next time needs to give me 2 hours. Okay, so let me show you in the West cluster. Why we are focusing in the West is because I say about all these big things that are happening, right? In West, we have a total of 7 townships or 7 estates. We have Bukit Batok. The one that we are standing on now is Bukit Batok Township. You have your Bukit Panjang, Choa Chu Kang, Clementi, Jurong East, Jurong West, Tengah, and the final one will be Tuas, that is not mentioned here. So you have a total of 8, plus Tuas is 8, right? I just want you to see this thing. I just show you in this area we are zooming in, the master plan of 2014 versus the new master plan, what is happening. So this is where Mont Botanic is, okay? You can see the land over here, nothing was carved out. Nothing was carved out for this large piece of land. And now if I zoom in, this is the latest update. And this is exciting. Why? Because this is a new township that is going to be formed up, and this is where the government is going to focus the township on. The previous township that they were growing for many years was where? Punggol. Remember your Punggol 21? Many years back, they used this term Punggol 21, and there's a joke. I have a friend staying inside there. He said the Punggol 21 is quite true because it took 21 years for it to form up for Punggol area. This time around with technology and everything, it will be better. So after Punggol, Tengah Township is the next one to go. Let me show you how complicated they have built up. Initially, it was like that. And they are going to build the different colors you see. Red will either mean your worship areas, your hospital areas. Okay, the yellow ones, orange ones you are seeing are all your residential area. Blue ones are mixed developments, where you have commercial shops at the bottom. And of course, the green areas are all being built up. This yellow with an E inside are your educational plots. So this township is the next township that they're building, similar to how they have built up Punggol. And this is where we are located. And the reason why, this is where we are located. And the reason why they're building this up, because above it is what? Right above it is your Jurong Innovation District. You can see? So once they build Jurong Innovation District with research, R&D and all these things, they need a population to be able to support this. And when they start building these things up, I won't be surprised condos will start forming up also, right? As they form up, then what are these areas going to become? They are all going to benefit from a ripple effect for this place, because why? The freehold areas around here, the people who comes in to work, okay, they may not want to be in this new area, they may want further in. There's a very big ripple effect that's going to happen in this area. And other than this, you can see from here, okay, so this plot, this one, used to be an education plot. This time round, they carve it, they remove the education plot. They make it into a reserve site. Reserve site means what? Means government is keeping it to be able to transform this into anything they want to in the future. It can be a shopping mall, it can be anything. So they took away the education plot, make it into a fully reserved site. You can see also here, from here, another education plot and a reserve site is now becoming residential. And previously, this line here, they added on more greens inside the area for the corridor to run. So this is the part of how the whole place is transforming. And mind you, I think this is huge. And especially, that's why I say if this development is going to take some time to build, right, then freehold properties are something that you need to be thinking about. Because you want to be able to sit through and see this thing materialize. While you are staying inside there, you are sitting on the gold mine, okay? As something that will build up in future. So let's look at this. Last 5 slides. Okay, so this is where we are. Okay, you can see the green strip that we are talking about. This is where we are. What we are being, this looks like a sotong to me. Okay, so what are we being surrounded with is we have this entire Tengah area. Can you see this? This is where the township is being built. This entire gray and purple area is where your innovation district will be, right? So this is sitting right outside, and this is where our residential plots are. And as we move downwards, this is where your CBD, the second CBD they are building, which is the Jurong Lake district. So this has a very strategic location into being in between of both. Because if today you are here, you may be further away from here. If you are here, you may be further away. So this is where you will see mainly residential developments will happen here to support the 2 commercial nodes that are happening on the left and right. And this is where your potential will come in. Okay, so let's look at this. Last few slides to show you some of the price trends. How much a master plan can impact prices in Singapore? Okay, we look at Jurong. We are in District 23 now, right? 22, like I told you, I already let go of the units there because I think probably hit what is supposed to hit for the next 4 or 5 years. Okay, I let go. So when we look at 22, what happened was, in 2008 was the first time government announced the master plan. The prices during that time was at 664 per square foot for private residential, right? 664. And then in 2017, the prices have already gone up to about 1,003. How much have the price increased in Jurong? Double. And this is something that I think people staying in Jurong wouldn't even expect it to double because it used to be a swamp area. I grew up here, it's just really nothing. So the transformation is amazing. And that's how government master plan can bring your prices up. Secondly, you can see from here, in 2000, so announcement is important, announcement timing. So this is the time where we are announcing Jurong Innovation District. You can see in 2008, these HDB prices are in Jurong. 2008, same thing they announced, it was 276, even HDB prices shoot up about double, almost double, 400 plus. And you realize a lot of people are cashing out from Jurong HDB to buy condos all around Singapore because they really live in a gold mine. And so that's how important an announcement will be and how you can exit after maybe about 10 years, about 9 to 10 years. Okay, then let's look at other areas because you say, hey Ken, maybe it's not fair. What about other areas? Maybe they are also growing and doubling in terms of prices. So let's look at District 4. Your District 4 is your Telok Blangah area, right? Your Telok Blangah area. You can see that in 2008, the price was at 1,005. 2017, your price is still at about 1,006 plus. Why? There are no announcement of any huge developments in the area. It's just a pure residential. Your prices will stay the same. And that's how it's not that simple, but that's how easy to be looking at trends in Singapore. 11 has been a very popular district all this while, right? It's a prime area, but that's where your Novena Newton is. You can also see that prices have been at 1,003 plus. When you trend down, you are still looking at about 1,004. You don't have a doubling in price unless we have a very huge development that's coming in. District 26, 694, ending off at about, what was this price? 836. All the sales are including resale, new launch, all add up together, you have an average pricing. Okay, so this is the difference between a master plan, announcement of a huge plan versus non-announcement of a plan. And of course, let's look at these last 2 slides. District 23 price trend. What we did was we drew out the price trend from 2009 for the next 10 years until 2019, March to March. Green one will show you your freehold prices, and the red one will show you your 99 years prices. So you can see over the 10 years, a freehold in District 23 has grown about 122% versus a 99 years lease that have grown 93%. So a lot of articles out there are telling you that, hey, freehold doesn't matter, leasehold is still more important, leasehold is the same and everything. Time will tell. That's why when I draw a 10 years time frame, you can see that the appreciation in District 23, your freehold prices are trending about 30% higher than a 99 years leasehold. And this is important, especially in a Hillview area. If you like this area is majority freehold developments, right? So this is where you should be looking at. These trends won't lie. Okay, and then the next one, this last one. Freehold versus 99 again, we look at the last 5 years. Are there any difference instead of 10 years? You can see that in the last 5 years, because I told you 13 was where the suppression happened, right? Your 2013, your true in TDSR, prices are supposed to trend down. But you see freehold in District 23, even though they are impacted because the growth is small, but they still grew about 7%. Resilient in pricing for freehold properties. And when you see 99 years, they dropped by a total of 6% already. So that's where your resilience is when it comes to freehold properties, right? So with that, I come to the end of the presentation. I thank you for your time. Sorry for the rush. I'll pass on to the next speaker. Thank you.